Hello, greetings. Welcome to Dividend Blasters. This is our 108th video. Topic today: silver, gold, Bitcoin, alternative assets soaring. These are at or near all-time highs. I want to talk about what you can do as an investor, aside from the obvious of just diversifying. And we've talked about these in previous videos on getting some exposure to Bitcoin, as well as to gold and silver. And I've talked about the ETFs that you can do, or if you do like me, and I'm doing ETFs, but I'm also I do own physical gold and silver, and I also own Bitcoin. But I want to talk a little bit about why this is happening, the underlying reasons quickly, and also what you can do aside from just the diversification, but some of the other things. All right, just a quick run through at the top level. Gold is at an all-time high. Earlier today, it was around 39.6150, so it's pushing $4,000 an ounce. Silver hit around 48.69, and Bitcoin hit 126,000. They pulled back a little bit, but they did hit this, and these are basically historical milestones. Why is this happening? Before I go further, a quick disclaimer: what I say is not financial advice. This video is for information and education, reflects my own opinions, research, and experience as an independent investor. So do your own research and due diligence before making any major financial investment decisions. So just a little bit of background. You can see the spot price for physical gold here went up around $3,960. That's getting very close to $4,000 an ounce. This is new territory. Silver, I want to say 48.54 earlier today. It's moved around a little bit. Um, these can be a little bit volatile, but this is basically new territory. We're very close to the all-time high that was set in 2011 at 48.70. And it would not surprise me if we clear it, or maybe we have cleared it right now while I'm talking to you. We'll see. And Bitcoin. Now, it has obviously pulled back as I've been speaking to you and putting some of this information together. It did reach over $126,000, a little bit above it, actually. Last time I checked, which was about an hour ago, it was around 125, 111. So it did pull back a little bit. But 126,000. So why are these alternative assets getting at or near all-time highs? Well, there's a few root causes. Let's just explore them real briefly. There's really four of them. And one is there is a weakening US dollar. I don't want to overstate this. This is just basically a fact um, for year to date 2025. And I do want to underscore that this is not a permanent thing, it is not a huge thing. It's just something that happens in global currency trade, a weakening US dollar. We're in a little bit of a dip with US dollar performance, and I'll show that to you in a little bit more detail in just a bit. Other reasons: global economic and political uncertainties. There's a lot of crazy stuff going on around the world, and it sends markets into a frenzy. We know that obviously the Russia Ukraine war is still ongoing. It's been going for a couple of years now. That does create uncertainty. There's also issues with the issue in the Middle East with the state of Israel and Hamas. We hope and we pray that this comes to an end. But, you know, the markets, they don't do that. They basically react, and they are very sensitive to developments with that. Also, central bank policies, and I'll talk a little bit about what the Fed is doing a little bit more, but we know that the Federal Reserve is looking to finally lower rates. For us investors, that's a good thing. But for folks that are investing in currencies, in dollars, if they see that happening, they may not be as anxious to do that. They may be looking for higher rates of return in other currencies. This all creates basically a movement for what is considered to be safe haven assets. Now, as far as fiat currencies go, there are really no other better safe haven assets than the US dollar. But it's not a perfect currency, it's a fiat currency. So, anyway, let's get into this a little bit. What options are available to investors? But let's just kind of explore the weakening US dollar. How do we know that it's weakening? We look at the dollar index, the US dollar index or the DXY. We can see year to date that it's down about 11 or 12%. The DXY. And what is the DXY? The DXY basically reflects the strength of the US dollar against six major foreign currencies. And they're all weighted um, based on their importance to US trade. Why is US trade important? The US dollar is the world's reserve currency. That means the US dollar sets the rules of international trade, uh, product and service trade, but also currency trade. And the weighting basically is this: the euro accounts for about 58% of weighting of these foreign currencies. And there's the Japanese yen, which is significantly less, a little under 14%. Then the British pound sterling, a little under 12%. The Canadian dollar, 9%. The Swedish krona, a little over 4%, and the Swiss franc. So when the DXY increases, it means that the US dollar is strengthening against the currency basket. And when it decreases, the dollar is weakening. So, why am I telling you this? This is the reason, this is one of the reasons why these alternative assets, physical gold, physical silver, and Bitcoin, are going up, because investors are looking to diversify. There may be a little bit of a loss of confidence in the dollar, um, but again, it's just basically, I account it to be more arbitrage. Folks are looking for ways to make money. If they see any weakness in one fiat currency, even if it's the world's reserve currency, they look for other areas to get a better rate of return, even in the short term. And that's what investors do. One thing you'll notice is that the DXY doesn't include fiat currencies from Mexico, which accounts for a huge part of US trade. Also, China is important, and of course, Russia. Uh, so, how do we account for that? There's another index. It's called the Nominal Emerging Market Economies US Dollar Index. And I'm not going to repeat that code because it's too many damn letters. But basically, it tracks the value of the US dollar against a basket of emerging market currencies. They're weighted to reflect their importance to US trade. And why am I showing you this? I want to show you that US dollar year to date has actually gone down against these emerging market currencies. And there's a variety of reasons for that. But take a look. The approximate weightings of these currencies, these emerging market currencies, are as follows. And this is just these emerging market currencies. So, interestingly, that they call the Chinese yuan an emerging market, but it's considered an emerging market. So basically, the Mexican peso, 24%, the Chinese yuan, 21%, the Taiwanese dollar, 10%, the South Korean won, 9%, Singapore dollar, 5%, Hong Kong dollar, 4%, Malaysian ringgit, 4%, Brazilian real, 4%, Thai baht, 3%, Philippine peso, 2%. I'm not going to go through the rest of these, but you get the picture. And then they all get very, 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 very small. And you can see the Russian ruble, less than 1%. Okay, so how has the US dollar performed against these emerging market currencies? Well, year to date, take a look. It is down. You can see that since January of 2025, it has gone down precipitously. And I get this from the Federal Reserve Bank of St. Louis. They track these. So, just kind of going back, what is, and I touched on these, what's driving the weakening US dollar? And again, I'm saying this is a temporary dip. Okay. But again, the Federal Reserve is looking towards cutting interest rates, narrowing the yield gap between the US dollar and other currencies. When that happens, folks are going to be like, hey, maybe I should diversify my investment in other currencies or in other investments denominated in other currencies. So they may pull out of dollars. They sell dollars essentially, and they buy other currencies. Here is something that really I think is more of a root cause of the weakening dollar, and this is more of a structural issue, and it's basically it's our fiscal house. We have chronic fiscal deficits, and we've had them for decades. That is a problem, and that is really a symptom of our political process, where policymakers can't decide, or they don't have the political will to make the necessary cuts to get us to a balanced budget and to get our fiscal house in order. There's gridlock. Obviously, you've got Republicans and you got Democrats. They have different agendas. Both overspend. The Democrats are worse at it. Be very candid with you. Reckless, actually. But the Republicans, they're not that much better, but they understand there's a problem. And then, of course, we have government shutdowns and also standoffs with funding the government and not just government shutdowns, but avoiding a fiscal cliff where the government runs out of money and you have to have a continuing resolution. That creates issues with investor confidence, and they may basically say, "Hey, listen, I don't think I want to buy T-bills. I may want to put my investment dollars elsewhere. I may want to invest in a foreign currency, or maybe in another a corporate investment, more stock, more bonds, whatever." But that is an issue. Um, and also, basically, there's reduced demands from foreign investors and central banks uh, as far as buying dollars, diversifying away from the US dollar. That does happen, but I think that's less of a factor. We've heard about BRICS, and it's basically a movement by Brazil, Russia, I want to say India, China, and I think I want to say Saudi Arabia. I can't remember. But basically, to have their own basket where they can denominate trade in their basket. I really don't see that going anywhere. I think that's less of a factor. It's probably a tiny factor. But really, all these kind of essentially will spook investors. And I think the majority of this is really the fiscal issue, as well as political instability on the global front that really tends to drive this. Um, I'd say it's really more temporary. I mean, listen, the US dollar is the world's reserve currency. So any dip, and it's been going on for a few months year to date in the DXY and in the emerging market dollars index, is really essentially viewed as a temporary phase within a larger long term context. The dollar is the world's dominant reserve currency, and it's the preeminent fiat currency. But having said that, it's a fiat currency. So not perfect, but really it's better than any other currency there is, any other fiat currency there is. Now, having said that, um, you know, well, actually, let me add to that. Uh, the US dollar is the best fiat currency. And why is that? The US economy is by far the largest. Yes, it's bigger than China's by far. We have the best capital markets on the planet, not even close. Most of the um, equities that are held and traded are by far done um, on NASDAQ and the New York Stock Exchange. And that really goes a long way. So, um, anyway, so that's really why this is terrible. But again, it's a fiat currency. And so, again, not perfect. And I basically go back to the fiscal house issue. So again, this kind of underpins all that concerns over U.S. economic mismanagement, inflation. When we overspend, when there's more dollars chasing too few goods, you have inflation. Inflation's gotten much better in the last 8 or 9 months, but it's not completely gone. When the new administration came in, we had 9% inflation. Really, that economic mismanagement from the previous administration takes time. It takes time to actually get inflation, but it takes time to get rid of it. I talked about the geopolitical risks. Also, we know this, and I didn't really touch on this. The Federal Reserve, but also other central banks around the world, are building up their reserves of gold, and also retail investors and institutional investors are doing what I do. You buy gold, physical gold, but also you buy ETFs that are backed by gold. Those inflows are surging, and that is further fueling price momentum. And also, investors are buying more Bitcoin. They're buying silver. All of these are acting to basically drive the price up of these alternative assets. So, wanted to throw that out there. And so, that's really why this is going on. And is this a cause for concern or alarm? I'm going to say no. I'm going to say that basically these are temporary. Um, Back and forth, back and forth. Now, you know what? Is the U.S. dollar going to be the world's reserve currency forever? No, but these things. If there's a change in that status, these things take decades, many, many, many decades. Could take a century. I don't know. But what can we as investors do? Invest in physical gold, invest in gold-backed ETFs, invest in physical silver, invest in Bitcoin. If you want true diversification in your portfolio, that is a good thing. And let me just actually underpin this a little bit here. Um, Even though that this dip in the DXY and also in the emerging market index year to date has happened, the US dollar still accounts for 58% of global foreign currency reserves. Who's next? The euro, 20%. Then the Japanese yen, 6%. Then the British pound, 5%. Then the Chinese renminbi, 2%. So, despite this recent decline, and again, I'm seeing this as being a temporary dip, the dollar's reserve currency share has not fallen below key historical lows seen since the early 90s. It's the largest reserve currency on the planet by far, and there's no clear alternative to the US dollar or any replacement of the dollar or like BRICS. Really not likely to happen. Even Chinese yuan, it lacks the full market openness and investor confidence required for such a role. There's no replacement among fiat currencies for the US dollar. But going back to what investors can do, diversify. Okay, don't go ahead and sell your investments because you're worried about the dollar. It's temporary, but have diversification. It's prudent to diversify your portfolio internationally. Look at ETFs that have holdings in Europe as well as in parts of Asia. The dollar's status in U.S. assets really should remain a key part of your holdings, but have some diversification. Include these safe haven assets: physical gold, physical silver, Bitcoin. And if you're not comfortable buying physical gold or physical silver, or having direct ownership of Bitcoin and having a digital wallet and a digital key, you can invest in ETFs that give you exposure. And I've talked about these in some of the previous videos. And these are really hedges against any uncertainty around the dollar or any inflationary pressures. That's what prudent investors do. What else can you do? Monitor what's going on around the world. The dollar movement is going to be linked to U.S. monetary policy. We all watch what Chairman Powell is doing. And, obviously we would have liked him to cut rates earlier, but we are pretty certain it's going to happen soon. Look at the fiscal outlook. Look at what's going on with the budget battles on the Hill and between the White House. And look at geopolitical events going on in the Middle East, as well as with Russia and Ukraine and around Europe. It's always very important, and you may need to go ahead and adjust your strategy appropriately. And really, here's, I would say, very important: be patient, be long term focused. Don't overreact. Okay, movements in the dollar index are temporary. They're dips. We shouldn't overreact to them. They're very normal, and it's short term. And folks, that is it. I hope you found this to be useful, enjoyable, and informative. And before we close, a friendly reminder: as an affiliate partner of Seeking Alpha, I can extend discounts to subscriptions offered by Seeking Alpha, the premium subscription, Alpha Picks, and both the bundle. You can check out the QR codes and the links. You can read a little bit more detail there. And I will say, with regards to the premium subscription, in addition to the discounts, you will get a 7-day free trial. If you decide you want to cancel before 7 days, no obligation, but I think you'll like it. Again, I've been a subscriber to the premium and to Alpha Picks for many years, and I love them. So give those links and those QR codes a look. If you are interested in getting access to interesting and insightful investment content, we are on X, Instagram, and Facebook. Look for Dividend Blasters. Look for that logo right there. Until our next video, have a wonderful day. God bless.